good afternoon, Maverick traders. Joe with you here on a Wednesday. It's the 15th of January. Let's jump into it. You guys know how this works. I'm going to give you the meaningful news of the day. Let's take a look at these markets technically and see if I can't share some trades, as we always do with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, you could see that we had a pretty substantial bounce. Rob made mention of this yesterday, and it's going to be directed to the CPI. Let's get to the daily news here. So the strong move up in the markets today, but still within bearish patterns. We've got, it could be a couple things. We'll take a look at them both. It's referred to as a bullish flag pattern, which is a shorter-term bear trend in an overall long-term bull trend, and or just a bear rally up to resistance levels. We'll figure that out together. So the CPI reaction shows us that the markets might be fixated on interest rates. And I had to say might, because I didn't want to project my outlook or my what I believe these markets have been focusing on. But these markets have priced in a few rate cuts, and I truly believe that we might not be getting as many as expected based on the strength of the economy. So when we get the number that we got today in the CPI, which was in line with expectations, however, the core, taking out energy and food, it actually slid a little bit. Now, it's still expanding, but it expanded less. It was a 0.4% expectation, came in at 0.3%. The year over year and the month over month, outside of which, not the core, were in line with expectations. I guess it was enough to make the markets move higher. Or was just an oversold bounce? Let's move over to how we finished. The Dow, the S&P, the Qs, the Russells, all up. Well over 1.5%. Q's almost 2.5%, and the Russell's over 2%. Very strong move to the upside. Rob made mention of this yesterday, saying that he thinks we're going to be above or below 1% in a move, regardless of what that CPI number comes out. And it's funny because the expectations of a volatile move have absolutely happened, this time to the upside. It could just be some sort of relief based on some of the selling we've seen as of late, and or showing that, we might have a Fed that's in line with their interest rate outlooks. Oil, however, jumped up, and gold jumped up as well. So this was kind of just a big move straight up for the day. Let's get a little further into it. The advanced decline line. Here we go. 82% advancers, 16% decliners. Everything participated. 67%. Still below the moving average, is 33% above. So we do have that problem, or I should say that the trend still kind of muddling things up. Let's just jump straight into the chart, and this is what I'm talking about. It's this slide. So we have a slide here, and I can draw this as well. Let me go ahead and see if I can't get these lines a little bit more permanent, because when you have this type of pattern is referred to as a flag pattern. If I was to zoom out on like a weekly chart, then this becomes something a little bit more bullish. And what it is it's just a slower moving downtrend within an overall uptrend. We've talked a lot about these support levels. Understand today's candle, folks, did put us right back above this sideways line that I just drew here. So this is a very important level. So we have kind of a channeling down move over the last, the end of last year, the beginning of this. And then all of a sudden we get a little bit of a surge higher. Now, the big line in the sand, at least for me, is going to be if we can exceed and stay above previous highs. So this does need to absolutely start to surge higher and break above, into new highs. Now, this can do this all at once, or this could slowly kind of chop around. So we kind of have to stay glass half full here. It's very difficult to do so, knowing that we have actually set, a lower low. Also, we've set a couple of lower highs. So we've got a downtrend going on, but it's a very anemic, weak downtrend considering where we've come from. This is why I took a larger snapshot on the chart. So what does that mean? And I'm going to say it again, folks. I refer to this as harvesting. We've got a mark that has been up over 2-3 years in a row of 20% gains plus. So yes, taking a little bit of profit makes total sense. The economy is still stable. The economy is still strong. Worried about interest rates being cut because the economy continues to stay strong, to me, is almost backwards. It's kind of funny. But to the markets, it's not, right? It's all about performance and the ease of capital, meaning how available is it, how cheap is it? Well, today's action just showed that we're right in line, seeing a little bit of ease when it comes to the consumer price index, and the markets reacted as such. Now, it doesn't really give me much to go on in forward thinking. Let's go ahead and take a look at the cues. But it does allow me to kind of get an idea of where sentiment is. So I can continue to follow along with underperformance and outperformance and take advantage of that. Overall trends and overall patterns will be our friend if we're patient with them. Same idea here on the cues. There's that bounce. We don't quite have that beautiful crossover that the SPY does. By the way, the 50-20 crossover would be kind of a kiss of death, showing that it could roll over and fall apart. It is still within the downtrend. I want you guys to realize that. In fact, I'm just going to go ahead and make sure you realize that by going back a slide. Give me 1 second here, folks, so you guys can see that. Now, this is still within its downtrend. It's looking super strong. It looks great. I mean, we could easily shoot higher here. That's fine. I'd like to see a little bit more volume. We could get that tomorrow. Who knows? But we are still in the higher end of a channel that is decreasing. We do have a crossover here. And if this turns around and kisses, we could easily see a move to the downside. So we're at this crossroads. And I truly believe a lot of this kind of came at the same, kind of in the same stride. I think we were expected to have an oversold bounce, and it came in with a strong CPI. And that's kind of exactly what we got here, folks, was that strong bounce that Rob was talking about this a little bit yesterday. Now, I'm not going to project markets falling apart or that they're going to move higher. However, there was a definite reaction sentiment-wise when it comes to that number. Here we go, a little deeper, taking a look, everything participated. I guess over here we got some beverages in the consumer defensive, maybe a bit of a hiccup. Healthcare that was underperforming, ABBV slid. We are getting into earnings season, by the way. I'll make mention of that later on here. But understand that we are going to go back into are companies making it or not, where are they projecting, and what are their numbers. The overall motion of the ocean, I think, is the reaction that we saw today with that CPI. So let's get into my outlook and where we're at. It doesn't change much. You guys can see here that gap up is very strong. It's very nice to see, but it did not break or exceed previous levels. I'm going to keep it at a hesitant -1 for the week. It's an oversold bounce. It's a bear rally. That's all I can do right now. And monthly outlook, I'm going to keep it a -1. I could go -2 because of that crossover. You could see that we had that crossover, so I highlight it one more time. Right there, that's a big deal. If this can sustain doji or even move sideways and then turn lower, this becomes a little bit more significant than just a strong bear rally that could move higher. So I'm super cautious still. I'm going to stay with my semi-bearish outlook, -1. It's been working, by the way, for some of the trades that I've seen that have followed through. So let's just see if we can continue to take advantage of it. So that being said, guys, I've been perusing around. I've been taking a look at some of the outperformers and underperformers. I said this a few weeks ago, and I'm going to see it again. I'm seeing some strength and weaknesses in everything. I'm seeing strong sectors have very, very weak stocks, and some weak sectors have some very strong stocks. It just depends on where you find them. So a couple of ones that are on my watch list. American Airlines was one. I actually had Delta on there, but it didn't really kind of pan out for me. I do like the Roblox and Hood on the bull side. On the bear side, Nike is continued to suffer. It's stagnant. It's staying low. In fact, I took a snapshot of this one a little bit longer term to show you guys that this is revisiting some support levels it hasn't seen in a while. Dell Computers, stuff like that. So tech's great, everything's neat, but if you're not AI attached or you're kind of out of sync when it comes to demand, you're getting punished here. Whether it's whether you're a name brand or not. And so I think that might kind of carry forward as we get into earnings. Also, now that I've said that, be aware of earnings and news because that can change things drastically. So let's just jump into some of the bulls here that I'm looking at. This is Hood. Coin, I've seen have a recovery. We know the cryptos have been aggressive. So anything associated with that seems to be working. This is Robinhood. Looks like it's having its second wind here. I I liked the volume as this broke out. One of my favorite trades, you guys know this, the high base or setting triangle patterns are my favorite. And it looks like it's done it. Now, it feels like it might give us a 1 or 2 candles or come back and retest. It doesn't matter. The overall idea of what I want you guys to focus on is look what this has done over the whole situation that we've seen over the holiday. Hood has done nothing but sustain. It's been right here bouncing around where we've seen massive corrections and fallback and pullbacks and profit taking. This is hung in there. It looks like it's having to move higher. Be mindful of its earnings when that happens. I don't know. I didn't get a chance to check. These are the types of trades or the charts that I'm actually looking for to the bull side. That being said, sideways is getting wild and violent. I don't like sideways. I don't think it's going to stay there, especially since the beginning of the year. Now, that's my opinion. So I've strayed from them. I'd like something more sideways to down or sideways to up if you're going to do anything sideways. So this is Nike. I zoomed down on this because I do want to show you guys way back here. So this is back in August last year, and it hasn't been this low since I think 2020 if you zoom way out. So Nike it's having a hard time. We've seen it try to push and pull. Lots of volatility here. So sideways to down makes sense. Once again, it is getting closer to its earnings, so just be mindful of that along with everything else. But those are some things on my watch list. I had a couple of others, folks. I'll share with you as they come, but they reversed pretty hard. So I had some bears that actually had 1 or 2 days up. I had some bulls that actually had 2 or 3 days down, 1 or 2 days down. But these are the ones that are still on my watch list that are actually a little bit closer to triggering. So just be patient. The markets move higher on a CPI data. Now that CPI data is excluding energy and food. It's the core, right? The core is what everybody goes off of, saying that, hey, if you take out all that stuff that we have to pay for every day, are interest rates in general going up or down? And right here, it looks like they're going up, but a little bit less up, right? 0.4 to 0.3% was enough to get these markets celebrating and excited. Now, if we can just calm down that pesky core, meaning energy and food, we might be going somewhere. So market's definitely optimistic to that, or could this just be a perfect storm, kind of overreacting or reacting to what was going to be an oversold bounce anyways? We'll have to see. So keep to the overall trends in stocks and sectors. I found that things that continue to bleed off or break support levels will do so, and it doesn't matter. I'm still not finding any sort of sector that I'm comfortable with. I know I go top-down approach. We do mark our sectors. I do agree longer term with the healthcare outlook, the energy outlook. That's great, but they're kind of muddled to me to where I can't generalize and just flat out say short XLE or buy XLK because there's just a little bit of noise inside all of those, and I imagine that'll get a little bit deeper as we get into earnings. So keep overall trends in stocks and sectors. Try and quiet reactionary noise and follow with the week to week stuff more so than just how bad and how hard it bounced or fell. Economic reports, we got a slew. Jobless claims, retail sales. I think retail sales might be a little bit more focused on than they should. Who knows? If we get an active consumer, right, we've got that CPI that seems to be balancing itself out, but with a very active consumer, that's going to wipe itself out, right? So it's kind of a push-pull going on here. We got the import price index, the Philly Fed, housing starts, building permits. Earnings reports, it's kicking off. Make sure you're checking. We got to make sure that we follow along to gauge sentiment. That's basically all we have right now, is to just kind of gauge sentiment. An expected oversold bounce, folks. That's kind of what I'm going to chalk this up to. The CPI was a beautiful little stimulant for it, but I think these markets were due for a bounce anyways. Let's see what happens over the next few days, but be mindful of earnings, especially if you're looking for new trades. All right, guys, thanks for joining me as always, and we'll talk to you next time. See you, folks.